Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today. This is a show where we will focus on the Mama Earth IPO which is underway, or the Honasa IPO, the parent company of Mama Earth, which is already underway, to really help you understand whether this IPO is something that you should keep on your watch list or something that you should avoid completely. So far, on day one of the IPO has got subscribed only 11% so far. What are the key reasons? Why is there a slow subscription at a time when through this entire year we have seen many IPOs getting subscribed fully on day one itself? Why are there few takers for Mama Earth IPO is something that we will try and understand. My guest today is Rajesh Agrawal, the head of research at AUM Capital. Welcome, sir, and thank you so much for taking the time out for this discussion. To begin with, what is your own take on Mama Earth's IPO or Honasa IPO? And help me understand, why are we hearing everywhere analysts saying that, perhaps this is a one that you should let go of?
Good afternoon, Shakshi. Thank you for calling me. See, there are few positives, but there are a lot of negatives in this issue. So, first, if I talk of positives, the company's brand has got good recognition. It's an asset-light model. And yesterday we saw very big marquee names in the anchor book. And the fourth point is the borrowings are very low. There are no long-term borrowings, and the short-term borrowing debt is almost 7-8 crores as of June 23. But these are the positive. But when we talk of negatives, which are a concern, I would say, so there is a huge competition for their products. Every existing name or a new entrepreneur are coming out with the same kind of product. If I say, for an example sake, they have a shampoo which is onion based. Now, after Mamaearth came out with something called onion based shampoo, we saw a lot of other companies coming out with the same kind of product, same generic, I would say.
Sure.
Secondly, the company is outsourcing its entire manufacturing, so they do not hold exclusive rights for they do not own their brands, and this is a big problem because when you are outsourcing your entire production, if something or other goes wrong from the production house, the quality goes down, you get a hit. Ad spends are huge. If you look at ad spend, they are spending around the ad spend has gone up by around 68% in the last 2-3 years. And even 50% of the IPO proceeds, which the company is going to get apart from the OFS, around 50% of that is going to be spent on advertisement only. There are no entry barriers to this company, these kind of products, I would say. So anybody who wants to come into this, they can come without major issues. And the valuations, that is very expensive, almost 3 digits of price to earnings multiple at 10,500 crore. I don't think one should apply at this point of time. Maybe after listing, if the price goes down, somebody can consider. But at this point of time, what I would say is valuations bahut zyada hai, and I am out.
Okay. Mr. Agrawal, you rightly pointed out the 3 or 4 key reasons which are appearing to be worrisome at this point in time. Competition, not a complete hold on manufacturing of the products, the increased ad spend and the expensive valuations, to name a few which you mentioned, are the key reasons. Let's also talk about financials here. When we talk about the bottom line, that also has been somewhat erratic over the last few years. One year they post a profit, the other year there is a loss, then again they post a profit, then again there is a loss. Right now they are sitting on a loss of 150 odd crore rupees. Your own sense of how have you read through the financials, and is it also raising a red flag for all the investors looking for those companies that may ultimately earn them good money on the stock markets?
Of course, it is a big concern, I would say. I missed out on my starting commentary. If the earnings are not consistent, why would one invest in that? Because nobody can actually give projections of how this company is going to perform. And the worst part is almost 82% of the revenue comes from the Mama brand, while other brands are not adding anything to it. And apart from that, 10 products are contributing to around 28% of the revenue. So product concentration is very high. Client retention is very low. Competition is very high, and the numbers are poor, I would say.
Okay, so financials are also a bit of the concern right now. Apart from this, if you also talk about the kind of expansion plans that the company has, the launch of new brands or products, is that also a concern that perhaps they also could not be as successful as how Mama Earth's brand has been so far in recollection?
That is always a concern with FMCG companies. They come out with new products, new improved version of their existing products, and sometimes the market doesn't take it. So the entire expenses on the advertisement, the entire expenses of the coming out of a new product, the new designs and all goes down the drain. So that concern is with almost every FMCG company, I would say. So when this company is announcing that they are going to launch new products, I think that concern will always be there.
And what about the cash flows? The company has experienced even negative cash flows from operating, investing, and the financing activities in the past. Is that also something that you would keep on your radar? That is something that is a key monitorable before one looks to invest here?
Of course, one can have a look at that also, because out of the 1700 crore issues which the companies announced, 1336 crore is from OFS only. So that means only 400 crore, almost 400 something is coming to the company. And out of that, 50% is going for advertisement expenses. So that means no basic money is there. So negative cash flow can always be there. That has to be looked upon in the long term, I would say.
Okay, so we've largely listed out some of the major concerns that you have from this IPO. But what is your own sense? Right now, we are looking at from the grey market the premium of about 7 rupees odd or so. What do you expect of the listing to take place? How the listing will be of Mama Earth?
See, gray market, I don't think is a proper barometer of anything, because we have seen in the past gray market premiums very high and the listing in negative and vice versa. So I don't think that it should be given more importance. Gray market premiums change on the closing day also. So I don't give importance to that. But still, I would say somebody looking to invest into this should wait for at least 2-3 quarters. If the company gives good numbers, one can go ahead and buy. We have seen in the past many new age companies coming out with IPOs and extensive valuation, loss-making companies, and we can always see what they are quoting at now, almost 40-50% discount. So it's better to wait for at least 2-3 quarters to the company to perform and then go ahead with investments.
Okay, one should definitely wait, not jump into the bandwagon immediately. If you're looking to invest in Mama Earth, 2 or 3 quarters of consistent performance is something that you should track and then therefore take a decision right here. But I also just wanted to get a sense of the overall space that Mama Earth is getting into. Of course, FMCG, but within that, perhaps one of the first companies from the e-commerce basket to get listed on the exchanges. The way in which e-commerce has grown in the past few years has stunned everybody, and now it is very difficult for at least the urban population to go back to only the traditional method of purchases. E-commerce has become a part of daily lives, be it your daily FMCG products or retail or apparel, anything you name it, and everything is now increasingly available at competition, like you also hinted out at. But why is it that companies like Mama Earth are not able to tap onto this growing demand and convert it into a solid financial performance, sir?
Because there is huge competition. You have likes of Reliance, Tata Click, Nykaa, Purple. They are all selling cosmetics or personal care products. So the competition is very huge. One cannot imagine spending some money on brand building as Reliance can do or a Tata can do. So the competition is huge. Even if you go into that area, that would be a big problem creating the kind of brand they have created. Even Nykaa has got a big brand, although the numbers are poor there also. But if you talk of brand, Nykaa is a much, much bigger brand.
Right. Looking at the first day subscription figures, do you also have doubts whether this issue would be fully subscribed or not?
So no, I don't have any doubts because we have almost observed in almost every issue that on the last day of the subscription, many HNI or ultra HNI category money comes in. So creating something at this point of time would be a real difficult job, whether it would be subscribed or not. But considering the kind of brand it has, the brand recall is at, I think subscription won't be a bigger issue. I think it would be subscribed.
It will be subscribed, nevertheless. Okay, last word from you, Mr. Agarwal. I remember discussing this with you off air as well, and you said a phrase that I'd like you to say on air as well. When I ask you that the bottom line would be for all the viewers looking at, like, what will you be doing on this IPO?
See, I used to watch Shark Tank sometimes back, and Mama Earth's promoters were one of them. Although the tagline was someone else, but I want to use it here also. That valuation बहुत ऊंचे है, इसलिए मैं out हूँ.
Okay, and for that reason, you are out of Mama Earth. Okay, great speaking to you, Mr. Agarwal. Thank you for reasoning out for all our viewers. What are the big risks and concerns that one should watch out for before jumping into the bandwagon? Thank you so much for taking the time out for being with us on Business Today television. Getting back to the markets right now, it's been a down kind of a day for the markets. 58 points lower in trade at 19,082. So 2 days of gains, and again the volatility factor has spelled out. To understand more about the markets, I'm now joined by Nagaraj Shetty, Senior Technical Analyst of HDFC Securities. Welcome, Mr. Shetty, and thank you so much for taking the time out. Your own sense of what has led to the downfall today, why have the markets corrected and could not sustain the recovery that we were seeing over the last 2 days?
Hi, good afternoon, Sakshi. Market has been in a sharp upside bounces after a steep decline recently. And currently, the market is facing Nifty, especially Nifty is facing resistance around 19,200 to 19,300 levels, which is a crucial in nature. And after this sharp decline, the market is now consolidating. I'm not expecting any bigger decline as of now, but today's range bound action itself is suggesting that at the strong hurdle, market is not willing to go down. So that means this 1 or 2 days of consolidation is likely in the near term around the 19,200 to 19,300 level, and eventually we could break above 19,300 hurdle in the near term. So market is currently at the resistance. There is a possibility of 1 or 2 days of consolidation or a small range movement or a minor weakness, and eventually we could head higher in the near term.
Okay, but what is the strategy that you're recommending to all the traders right now in the markets?
Yeah, I'm expecting Nifty to go up, right? One can look to accumulate long, create longs in the market. Actually, the market after the decline, the market is in a favorable for upside bounce, and currently the 20-day EMA is offering support around 18,850 levels. One can look to buy Nifty future, Nifty call options. One can create a long position from here. I'm not expecting any bigger decline from here, and one can place a stop loss of 150 points on the downside from here, from 19,100 to around 18,950 odd thing. And once the Nifty moves above 19,200 to 300 marks, we are likely to see the next overhead resistance of around 19,700 to 800 in the near term.
Okay, got that. Right, we are, in the midst of the festive season and just a few days away from the peak Diwali as well. And this is a time that most of the investors would perhaps be looking at this dip as an opportunity to invest as well. Is this a good time, A? And if there are any specific Diwali picks that you'd like to share with all our viewers?
Yes, true. Because since the market, though market is in a consolidation mode, there are a lot of stock-specific activities happening, and some stocks are buzzing, and some stocks are underperforming. I think I have three long picks during this festive season. I'm expecting a decent upside returns in these three stock picks. So all three are from a buy side. First one is a Mangalam Cement. Chartically, if you look at the Mangalam Cement, has witnessed a phenomenal upside momentum over the last few months, irrespective of market headwinds. This stock has outperformed. Currently placed at the hurdle of around 400 levels, tested in this week and was not able to move above that hurdle. I'm expecting eventually this resistance of 400, 398, 400 is going to be taken out on the upside, and eventually this stock would head towards the upside target of around 440, 438, 440 levels. One can buy at this point of time and target for the 440 and place a stop loss of 370. My next stock is in a small cap banking side, City Union Bank. Chartically, if you look at the City Union Bank after the sharp decline of December to March 2023, this stock has shifted into an accumulation pattern over the last few months. Placed at the hurdle of around 140, 142 levels, tested a couple of times and not able to break above that hurdle. This time, overall chart pattern is looking positive. Positive indicators are showing, even volume and RSI is also showing positive thing. I'm expecting eventually the stock to break above the 140, 142 levels, currently trading around 138 levels, and one can look to buy at this point of time around 138. The upside target would be around 155, and one can place a stop loss of 128. My
Okay,
third
got that. Yeah.
stock pick is TIA India. TIA India, the name is the Tube Investments of India Limited. TIA India, the chartically has been in a amazing up move over the last few years. As technically, we believe the stock has moved up as per the positive sequence, like higher tops and higher bottoms. Currently showing consolidation pattern around, and now it is breaking above the 3,000 mark, which is a set of resistance as of now. The overall chart pattern is looking positive. The 200-day EMA has offered a strong support so far around 2,900 levels. Currently placed around 3,150 levels. One can look to buy around 3,152, 3,150 levels. Target would be around 3,500. One can place a stop loss at 2,950.
All right, great. Well, thank you so much, Mr. Shetty, for sharing with us these three Diwali picks as well. Let me just recap for all our viewers what Mr. Shetty has recommended in case you're also looking at some stock-specific opportunities right ahead of Diwali. These are the stocks that you can actually look at. Mangalam Cement is something that he has chosen from the cement basket with a target price of 440 odd rupees, with a stop loss of 370 that you need to keep on the stock. Currently, the stock is hovering near 393 rupees. City Union Bank, another stock that you can actually look at with a target price of 155 odd and a stop loss of 128 is from the small as banking space, especially the PSU banking space that you can look at. Even today the stock is up by about 3.3% and it can further give you an upside to almost 138, 139 odd rupees. On the other side, Tube Investments of India is another stock that he's picked out with a target price of 3,500. A strong upside from the current levels of 3,150 is what he expects. The stock is up by almost 3% today. You need to keep a stop loss of 2,950 on this one too. Well, all right, these are the three Diwali picks that you can definitely keep on your watch list. The markets, however, are still down in trade, 19,085 odd. Let's look at the sectors and the stocks that are actually on a downward trajectory. You have autos now as the top sectoral loser. Following it is healthcare, oil and gas, private banks and the Nifty banking space, all of them down by upwards of 0.5%. On the Nifty, however, the key stocks that are contributing to the downfall: M&M, Sun Pharma, Eicher Motors, LTI Mindtree, Reliance Industries, Bharti Airtel, definitely the key losers, because of which the markets have not been able to find support in an otherwise muted set of the market. We'll continue to get you more update on the market, so do stay with us on Business Today TV. Don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms as well. Until then, thanks for tuning in.
Well, hello and welcome to Business Today TV. I am Chetan Bhutan.